Hello, and welcome to the webinar, Exploring PSAB's Exposure Draft, the Conceptual Framework for Financial Reporting in the Public Sector. We're committed to providing closed captioning in order to promote the accessibility of webinars that we offer. So you'll see the option to turn on closed captions at the bottom of your screen as shown on the screenshot that you can see. We endeavor to provide closed captioning that accurately reflects the information conveyed. Please note, however, that there may be instances where we are unable to accurately capture what was said. If you have any questions or concerns about the closed caption that's provided, please contact us at info@frascanada.ca. So, hello again. My name is Martha Jones-Denning. I'm one of the principals responsible for the Concepts Underlying Financial Performance project, and I'm pleased to welcome you to the webinar. I will be your moderator for this Conceptual Framework webinar. So I'm going to walk you through some housekeeping items, introduce the speakers, make some introductory remarks, possibly ask some questions throughout the webinar, and come back at the end of the formal part of the webinar to work through the Q&A session. So let's start with the housekeeping items. If you have a question, please use the Q&A function. We will address the questions in an appropriate order when we get to the Q&A portion of the webinar. It is now my pleasure to introduce today's two speakers, Nikki Young, the chair of the Conceptual Framework Task Force, and Antonella Risi. Nikki is a professor emerita accounting at St. Mary's University in Halifax. She has taught financial accounting and reporting for many years and has received numerous teaching awards for her work. She is the co-author of 5 editions of the most widely used Canadian intermediate accounting text and of the IFRS Primer International GAAP Basics. Nikki has been active in the accounting profession, serving on many committees of the CICA, now CPA Canada. Nikki has also been involved with the Public Sector Accounting Board for many years, including serving as chair, and has served on many of its task forces for more than 25 years. She is joined by Antonella Risi, a PSAB principal. Antonella is the project lead on the Concepts Underlying Financial Performance project. So I want to give you a feel for how we're going to proceed this afternoon. This webinar will focus on exploring the Conceptual Framework Exposure Draft published by PSAB on January 11th, 2021. I want to pause for a moment and recognize the importance of the release of the exposure drafts. The approval and release of these exposure drafts is an important milestone for Canada's public sector. These 2 key elements of the Public Sector Accounting Handbook will affect public sector accounting standard setting and financial reporting for years to come. For you, the issuance of these exposure drafts means that PSAB is one step closer to finalizing a new conceptual framework and new reporting model for the public sector. And this is something that many of you have been anticipating for some time. During today's presentation, we will provide a brief project background and then focus on the key proposals in the exposure draft for a revised conceptual framework. We're going to emphasize what is new in the exposure draft in relation to the documents for comment issued in 2018. Then we'll discuss the various effects of the proposals, including how you may be affected by the proposals. And finally, we'll end the session by telling you about next steps, and there will be time for questions at the end. So there's a lot that we could say about the conceptual framework. We know that everyone is busy, so we're going to focus on the key proposals in the exposure draft. The slide deck does include some slides that speak for themselves, and so these are not covered in detail. The slides are available to you through the webinar's landing page. Before we start, we want to first acknowledge the Concepts Underlying Financial Performance Task Force. It has been instrumental in developing a revised conceptual framework and reporting model on behalf of PSAB. The task force, as I mentioned before, is led by Nikki. You can see each member represents a different PSAB stakeholder group. Each member brings to the table incredible knowledge and experience that has contributed greatly to the development of proposals for what we believe is a comprehensive, understandable, and high-quality revised conceptual framework and reporting model for the Canadian public sector. We hope you agree. So where are we in the project? PSAB is in the consultation and comment period of the exposure draft phase. This webinar is a timely way for you to get an overview of the proposals, and we hope that you'll be intrigued enough by this overview that you'll read the proposals and provide us with your feedback. Your comments can be on the whole set of proposals or only on certain aspects of them. A lot of work has been done on this project to get to this moment. Between 2011 and 2015, 3 consultation papers were issued. The feedback on these papers formed the basis for the Statement of Concepts for a Revised Conceptual Framework and the Statement of Principles for a Revised Reporting Model that were issued by PSAB in 2018. At that time, extensive communications efforts were undertaken by PSAB staff and volunteers. As a result of that consultation process, PSAB heard from over 100 respondents on each document. We heard from stakeholders across the country, including some that PSAB had not heard from before. This was an unprecedented amount of feedback for PSAB to receive. So for any that did respond, thank you very much for taking the time to provide input into these important pieces of the Public Sector Accounting Handbook. During this webinar, we will highlight some of the feedback that PSAB heard and how the board has responded to that feedback. So now I'd like to turn it over to our first speaker, Antonella.
Thank you, Martha. So what is a conceptual framework? It is the foundation or constitution that assists PSAB to develop standards. It helps preparers to account for transactions, and it assists users in interpreting information in financial statements. A conceptual framework is like the North Star because all standards in the Public Sector Accounting Handbook will be based on or revolve around the foundations and concepts established in the conceptual framework proposals. A conceptual framework is also like the North Star because it helps you as a user navigate and determine a way forward when PSAB has not yet issued a standard on a topic or a specific question isn't dealt with explicitly in an issued standard. This is because the conceptual framework includes fundamental concepts such as those listed on the slide, including what is the objective of financial reporting, what makes financial statement information useful, and what are assets, liabilities, revenues, and expenses, to name a few. In its exposure draft, PSAB is proposing a conceptual framework that would have 10 chapters, and we will talk a bit about these chapters in our presentation today. These chapters would replace certain aspects in the existing conceptual framework set out in section PS 1000, which is the Financial Statement Concept Standard, and section PS 1100, Financial Statement Objectives. The intent of the proposals is to clarify and add guidance to make the conceptual framework more understandable. The proposals for a revised conceptual framework build on and improve the existing conceptual framework. So let's get right into it. Let's look at the characteristics of public sector entities, Chapter 2, and the feedback related to them. In the Statement of Concepts, the Statement of Concepts identified 5 characteristics of public sector entities, and these are listed on the left-hand side of the slide. Some respondents to the Statement of Concepts indicated that not all characteristics apply to all public sector entities. Specifically, they said that not all characteristics apply to government components and government organizations. And respondents also noted that the longevity of governments should be considered as an additional characteristic. PSAB considered this feedback. And so with respect to the applicability of the characteristics, PSAB added content about how the characteristics apply to government organizations and government components. The material allows government components and government organizations to see themselves in the characteristics. PSAB also recognizes that there are several characteristics that do not apply to all public sector entities. For example, the monopolistic environment. Now, with respect to the feedback related to the longevity of governments, PSAB decided to include longevity of the public sector as an additional characteristic, which considers the longevity of governments.
Antonella, before we move on, can you give some examples as to what material PSAB has added or what PSAB has done to show that the characteristics also apply to government organizations and government components?
Yes, of course. An example is in the write-up for the inherent public accountability characteristic. PSAB recognized that as worded in the statement of concepts, that particular characteristic was too strongly tied to the power to tax. Many government organizations, such as government not-for-profit organizations, do not have this power. So the board decided to amend that section titled Power to Tax. It thought that the phrase ability to obtain the use of public resources better described the reasoning for the inherent public accountability characteristic and clarified that taxation is just one way of obtaining public resources. So let's look at Chapter 3, which identifies the financial reporting objective. Identifying a financial reporting objective is important because it identifies the goal and purpose of financial reporting, and everything else follows logically from that objective. The financial reporting objective of public sector entities is to provide information for accountability purposes to the primary users, who are the public and its elected or appointed representatives. This chapter also explains that public sector entity financial reports should show how the entity is accountable for the extent to which its performance, to the extent to which it performed in accordance with its authorities, including its budget, its financial condition, and its financial performance. We'll discuss later in the webinar the service capacity, but the slide highlights where it is now proposed to fit within the conceptual framework.
Hi, Antonella, interrupting again.
Okay.
The International Public Sector Accounting Standards Board, the IPSASB, states that the objective of public sector financial reports is to provide information for both accountability and decision making, but PSAB only mentions accountability. Could you clarify?
Yes, I would love to clarify. So PSAB is of the view that the objective of financial reporting by public sector entities is to provide information for accountability purposes. And then that information will contribute to and inform decision making. So PSAB exposed this notion through past documents for comments, and most respondents, if not all, agreed with this particular notion, that the objective of financial reporting is to provide information for accountability purposes. So I hope that clarifies things, Martha. So now let's skip ahead to the Financial Statement Foundations chapter, Chapter 5. Chapter 4 is important, but it really functions as a segue between the broader notion of financial reporting and then the information that can be provided in financial statements. So let's look at Chapter 5. The statement of concepts set out the 5 financial statement foundations, which are listed on the slide. Most of the feedback PSAB received on the statement of concepts was in relation to the concept of control and the concept of service capacity. So let's talk a bit more about these two concepts, and let's start with control. Although a majority of respondents agreed that the concept of control should be included and described in the conceptual framework, many of them were concerned with the way it was described. They felt that parts of the description contradicted text in section PS 1300, which is the Government Reporting Entity Standard. As a result, PSAB amended the description to ensure that the proposed conceptual framework would support, build on, and not contradict standards in the Public Sector Accounting Handbook. Now let's spend a few minutes on the concept of service capacity. Service capacity is the capacity to serve the public. Since the overriding objective of public sector entities is to serve the public, measuring service capacity is important. Most respondents agree that financial statements of a public sector entity provide a measure of the entity's service capacity and changes in it during the accounting period. However, they noted that service capacity is much broader than what can be articulated in financial statements. An entity's service capacity is broadly affected by many things, such as the items listed on the slide. Now, since financial statements can only report certain aspects of an entity's service capacity, PSAB removed the concept as a financial statement foundation. Now, although service capacity is not a financial statement foundation, it does underpin the broad accountabilities of financial reporting in the public sector, specifically financial condition and financial performance, which are mentioned in Chapter 3. Reporting on financial condition provides insight into an entity's service capacity, and reporting on financial performance provides insight into how an entity's decisions and other events of the period have changed its service capacity. So as a result, the board decided to introduce the concept of service capacity in Chapter 3, the chapter that talks about these broad accountabilities. And the board also decided that the narrower notion of service capacity that can be measured and reported on in financial statements should be explained in Chapter 4, which recognizes that financial statements cannot measure all aspects of service capacity or financial condition or financial performance.
Thanks, Antonella. That it's an important concept, so thank you for explaining what service capacity means. Will the term actually be used in or required in the financial statements?
No, so actually that's a very good question, Martha. No, the term service capacity would not replace any of the existing terminology in the financial statements. So now I'll pass it on to Nikki to take us through the remainder of the conceptual framework.
Thank you, Antonella. Now we'll continue to narrow from the broader financial reporting basics in the earlier chapters to well, next is the statement objectives we want to look at in Chapter 6, and they foreshadow what is going to be reported in the financial statements. And these are objectives that are fulfilled through the reporting model that are described in the other exposure draft, the other primary exposure draft that was just released, Financial Statement Presentation, Proposed Section PS 1202. And because the feedback received on this chapter was very consistent with the feedback received on the reporting model itself, we'll not say much about the first 4 financial statement objectives in this webinar. Instead, we recommend that you sign up and for the webinar Exploring the Financial Statement Presentation Exposure Draft to get more information. So for now, we'll skip ahead and expand a little further on the last 2 objectives you see on this slide, and they are continued on the next slide. In the Statement of Concepts, PSAB proposed new Objective 5, reporting non-compliance with legislative authorities. And some respondents were concerned that this objective is outside what can be reported on financial statements and broader than what is in the existing framework. The intent of this objective, however, is to consider solely non-compliance with financial authorities in relation to revenue, borrowing, investing, expense, and expenditure limits, and the same as those in Objective 4 of the existing reporting model. The intent is not to make the objective broader or to require disclosures additional to those required in the existing model. Objective 6, Disclosing Risks and Uncertainties, was a new objective proposed in the Statement of Concepts. Some respondents expressed concern with the lack of guidance in relation to this objective and how broad the concept itself is. So the purpose of this objective and all the other financial statement objectives is really to foreshadow and establish the conceptual underpinnings for what is to be reported in the financial statements. Because of this, all financial statement objectives will appear somewhat broad. The details of how the objective would be met are provided in the various standards in the PSA handbook. So for now, for example, section PS 3300, the standard on contingent liabilities, includes disclosure requirements around uncertainties related to contingent liabilities. So now let's turn our attention to the qualitative characteristics, the qualities of financial information that make financial statements useful. The qualitative characteristics are noted on the left of the screen of the slide, and as noted on the right-hand side, PSAB has also proposed some considerations that need to be taken into account to achieve a balance amongst the qualitative characteristics. There was general support for both among respondents to the earlier papers.
Sorry, Nikki, I wanted to ask a question here as well. In the statement of concepts, PSAB proposed to remove conservatism as an aspect of reliability and introduce the notion of prudence as a consideration for achieving that balance you were mentioning among the qualitative characteristics. What is the implication of this move from conservatism to prudence on the contingent asset and contingent liability standards, where the idea of conservatism played a big part in developing them?
Thank you, Martha, for that question. Good one. Although conservatism was considered in the development of those standards, removing the term would not lead to an amendment to them. And during the development of the standards, PSAB made its decisions based on whether the information that's required from the standards would improve the accountability, considering all the qualitative characteristics and elements definitions. In its statement of concept, PSAB confirmed that the elements of financial statements, you see these are all very familiar terms, that the elements are assets, liabilities, revenues, and expense. And PSAB also proposed improved definitions for each of the elements. And the bulk of the guidance in relation to these elements is found actually in the individual standards. This approach emphasizes the requirements that for all items that meet the definition of an asset or liability to be recognized in the financial statements, regardless of whether a specific public service accounting handbook standard exists for. There was general support for these elements and their proposed definitions in response to the 2018 Statement of Concepts. And as a result, PSAB is moving forward with these elements and their definitions. And having said that, PSAB did receive other feedback in relation to elements, and so we want to spend some time addressing parts of that feedback. A few respondents continued to express their desire to include deferred inflows and deferred outflows, as elements. In developing the statement of concepts, PSAB concluded that deferred inflows and deferred outflows that do not meet the definitions of assets or liabilities, a definition of an element, should not be recognized in financial statements. And this conclusion was based on the feedback we received to consultation paper 2, where the majority of respondents endorsed pretty strongly an asset and liability based model, a model that does not include deferrals as elements, and indicating that deferrals can be confusing or not really well understood by readers of the financial statement, not very understandable at all. However, PSAB did acknowledge in Chapter 6, Financial Statement Objectives, that certain revenues and certain expenses arising in the period may be recognized outside of that period's surplus or deficit, but instead be recognized directly in a separate component of net assets or net liabilities. The board felt that this approach would better contribute to public understanding of the public sector entities' financial position as being comprised of the economic resources, economic obligations, they're solely of assets and liabilities. And the board has reconfirmed this position with no other compelling evidence having been received to dispute this conclusion. Similarly, a few respondents encouraged PSAB to reconsider their position on other resources and other obligations. And these were introduced in IPSASB, the International Public Sector Accounting Board's conceptual framework, as categories of financial position, rather than as elements. PSAB's arguments against doing this are similar to the arguments against recognizing deferred inflows and deferred outflows. And it's interesting to note that although IPSASB introduced other resources and other obligations into their model, it has not used these categories to date. And we'll talk a bit more about IPSASB's conceptual framework during the last part of the presentation as it relates to PSAB's international strategy. A few respondents encouraged PSAB to clarify accounting for capital contributions or capital transfers. However, this is a standards level issue, and so it is outside the scope of the conceptual framework review. Having said that, it's important to note that PSAB did conduct a post-implementation review of the capital transfer standard. Based on that work, the board decided to stay the course with this standard. However, the exposure draft for the revised reporting model does discuss the presentation of capital transfers, and this will be highlighted in the upcoming presentation on the reporting model. Other respondents encouraged PSAB to clarify the acceptability of rate-regulated assets and liabilities. And this complex issue is also outside the scope of our project. Again, it's a standards level rather than conceptual issue. However, PSAB in its annual plan has committed to monitoring the progress made on rate-regulated project being undertaken by IPSASB, and PSAB plans to review the exposure draft and provide input from a public sector perspective at that point.
Nikki, could I ask you to speak to something in addition before we move to the next slide? There are a few standards in the Public Sector Accounting Handbook that are inconsistent with the proposed conceptual framework when it comes to the elements. And to be honest, those same standards are in conflict with the existing conceptual framework. But could you clarify what PSAB might do in relation to these inconsistencies?
Thanks, Martha. Another good question. The board is aware of these inconsistencies and is reviewing some of them. Although, they're reviewing them through existing projects on its technical agenda, or by determining whether the inconsistencies should be part of the next project priority survey that would direct the board's future technical agenda. Recognition. Here, the recognition criteria are proposed to remain essentially the same as in the existing framework. That is, recognition occurs when the item meets the definition of an element, when the future economic benefits are expected to be obtained or sacrificed, and the item can be measured. All stakeholder groups essentially agreed with the general recognition criteria proposed in the Statement of Concepts. Respondents also agreed with the derecognition proposals. However, PSAB decided to enhance the derecognition criteria so they would be the inverse of the general recognition criteria. So derecognition could actually stand on its own without direct reference to the recognition criteria.
Nikki, I wanted to follow up on it because we've talked about elements and now we've talked about recognition. The asset and liability definitions include the idea that future economic benefits are expected to be obtained or sacrificed. And those are also in the recognition and derecognition criteria. Does that make these criteria redundant? Could you speak to that?
Yeah, certainly. Yes, there is a redundancy, the same redundancy that exists now. We tried to remove the expectation threshold. The task force had discussed that, and PSAB discussed it. And we tried to remove the expectation threshold from the definitions, but most respondents didn't want it removed. And they felt that its removal might lead to pressure to identify every possible asset and liability, which might impose a significant operational burden with very little benefit, actually. So as a result, PSAB decided not to remove the notion in the element definitions, and the board believes there's no harm in retaining the existing redundancy. Now, before ending our discussion on recognition, I'd like to speak about recognition exclusions and what PSAB is proposing to do with them. Now, this refers to the existing framework excludes some items. These items are shown on the left-hand side of the slide, to exclude them from recognition in an entity's financial statements. In the statement of concepts, PSAB proposed to remove these exclusions from the framework because they are pragmatic exclusions. They're standards level matters, not conceptually based, and move them to the asset standard, section 3210, PS 3210, until PSAB develops more specific guidance in relation to these items. There was significant support for this proposal. And for many, this meant the possibility of recognizing some of these items in the financial statements in the future. And some respondents encouraged PSAB to reconsider removing the recognition exclusions from the PSA handbook entirely. PSAB considered this, but recognized that before these exclusions can be removed, each type of economic resource must be considered individually and stakeholders consulted. Appropriate guidance regarding the recognition and measurement must be provided, especially for inherited items. The board reconfirmed this position. Some respondents noted that moving the recognition exclusions to the asset standard actually contradicts the intent of that standard, which is to provide application guidance rather than recognition guidance. And the board agrees and is proposing to move the exclusions to the proposed financial statement presentation standard itself. And we should note that since 2018, PSAB removed the recognition exclusion for purchased intangibles. And while no detailed guidance was issued, purchased intangibles that meet the definition of an asset and the general recognition criteria can now be recognized in the financial statements. New guideline PSG 8 and its basis for conclusions explains that further. Respondents made a number of suggestions in relation to the recognition and measurements, which are noted on this slide, relating to natural assets. The development of guidance and tools for accounting for natural assets in financial statements or other reports is outside the scope of this project. However, PSAB will include this topic in its next project priority survey and get feedback on its importance to the to PSAB as members of interest. The measurement attribute was not one of the concepts PSAB asked the task force to reconsider. And although the task force and the board reflected on the work done by other standard setters on measurement, PSAB did not conduct a full reconsideration of the relative merits of all possible measurement attributes that could be used. So, consistent with the existing conceptual framework, the financial statements of public sector entities would continue to be based primarily by reflecting assets, liabilities, transactions, and other events at their historic cost, unless PSAB determines that another measurement attribute better serves the accountability objective for a particular item. And this would be at the standards level appropriately justified. And there was general support for this approach.
Nikki, just a clarification here. The exposure draft includes a list of measurement attributes. Are these the only measurement attributes that PSAB can look to in future standards?
No, the list in the exposure draft is not an all exhaustive list, so there could be others. Going concern, because measurement is a function of the going concern assumption, respondents encouraged PSAB to provide further guidance and improvements. As a result, improvements are proposed to the exposure draft, to reflect the Canadian public sector environment, such as considering the longevity of governments. Other guidance in relation to going concern is also introduced in the proposed financial statement presentation standard that is the subject of another webinar. And this is consistent with the approach taken by other standard setters. Chapter 10 emphasizes presentation concepts. That is, providing understandable information to the public and its elected representatives for accountability purposes. It sets out ways to make the information in financial statements more understandable and accessible to individuals, to users, helps entities apply professional judgment about disclosures and communicate information more effectively, therefore improving the effectiveness of disclosures for users. And it helps PSAB improve disclosure requirements in individual standards. These concepts relate to the items noted on the slide. In the glossary of the Statement of Concepts, PSAB had proposed a definition of government as noted on the slide. However, there was not enough support to go forward with the proposed definition, as respondents were concerned that the exceptions noted in the definition would cause confusion. As a result, PSAB decided not to define government because most readers understand what the term government means when they read the PSA handbook. And the drivers that led to a review of the definition of government have been resolved through other changes in the proposed framework and proposed financial statement standard. Examples would be the improvements to the characteristics of public sector entities, which includes a discussion on the longevity of the public sector, underscoring the longevity of governments. Also, the definition of government noted in existing paragraphs, section PS 1000, that's the existing conceptual framework, paragraph 2, and PS 1100-02, that was creating concern is being removed. And the enhanced going concern discussion, which also references the longevity of public sector entities. So over to you, I believe, Antonella.
Yes, thanks, Nikki. So that takes us to the end of the conceptual framework proposals. PSAB believes that the proposed conceptual framework will set the foundation for standard setting for years to come because it is responsible and responsive, because it is rooted in the notion of accountability and what is in the public interest. It considers all public sector entities, and it considers all the feedback received to all the documents for comment. So now let's look at the effects of the proposed conceptual framework. The changes to the existing conceptual framework would not have an immediate effect on the financial statements of most reporting entities. However, entities could be affected by the proposed conceptual framework if they need to use it to develop or select accounting policies when no standard specifically applies. In such circumstances, the revised conceptual framework would be applied prospectively. Also, applying the new presentation concepts, which Nikki described in Chapter 10 of the proposed conceptual framework, may lead reporting entities to review their financial statement disclosures. So that's with respect to preparers. For PSAB, a more complete, clear, and updated set of concepts will help it develop standards that better meet the needs of the primary users. And for PSAB, the conceptual framework will be effective immediately when issued. Now, we can't do a presentation on the impact of the proposed conceptual framework without discussing the users. The intent of all the improvements in the conceptual framework is to make financial statement information more understandable to the users.
Antonella, could I ask you to comment on why you think it makes sense that the conceptual framework does not override existing or future standards?
Thank you, Martha, for that question. Yes, on the slide it says that the conceptual framework does not override existing standards. This particular notion is common with many conceptual frameworks, including those of the International Standard Setting Board. So it's not new to Canada. A lot of standard setting boards and have the same notion with respect to their conceptual frameworks. Now, it's important to note, though, that although nothing in the conceptual framework overrides any specific standard, the conceptual framework is important and it is relevant for a few reasons. One, it helps PSAB develop standards that are based on consistent concepts. Two, it helps preparers develop consistent accounting policies when no standard applies. And lastly, but certainly not least, it will help users understand and interpret the standards. So I hope, Martha, that answers your question. The proposed conceptual framework will also have an effect on setting future standards. In May 2020, the board committed to continue developing future public sector accounting standards that serve the public interest. And when developing these future standards, the board will now use the principles of international public sector accounting standards, which I will refer to as IPSAS. If an IPSAS equivalent already exists, and it is determined that a modification of those principles is not required. However, PSAB will amend a principle in an IPSAS if it is contrary to PSAB's conceptual framework or if there is a unique Canadian circumstance. So that begs the question, when could an IPSAS principle be contrary to PSAB's conceptual framework? And so to be able to answer this question, we have put together a comparison of the various concepts within the two conceptual frameworks. So this is the first slide of 3 slides that shows the comparison. And on this slide, you can see that most of the concepts noted are similar between the two frameworks. There is one minor difference that we do want to note, and that pertains to the primary users. IPSASB's primary users extend beyond the general public and its elected or appointed representatives. The practical implication of this difference may not be significant, but there is the potential for the inclusion of different information in financial statements prepared under IPSAS to meet the needs of those additional users. So now let's look at the other slide, the next slide. And as you can see, there are a few other differences between the frameworks. And we want to briefly talk about a few of them. The first one is related to the financial statement objectives. PSAB, in its proposed and existing conceptual framework, identifies specific financial statement objectives that foreshadow its reporting model. IPSASB does not. This approach is unique to PSAB and Canada and has its roots in how the Public Sector Accounting and Auditing Committee, which was established about 30 to 40 years ago, originally built consensus on what financial statements should report. PSAB feels that there continues to be merit in articulating the financial statement objectives because they provide the basis for determining the principles for the reporting model and the focus or indicators to be reported on each statement. The second difference we wanted to highlight is with respect to elements. IPSASB has ownership contributions and ownership distributions. PSAB does not. PSAB did consider including ownership contributions and ownership distributions, but it determined that differentiating between ownership contributions and government transfers was problematic, and true ownership distributions and ownership contributions are rare in the public sector. And so by including them in the conceptual framework, they would be given undue prominence. Now, since ownership distributions and ownership contributions are rare in the public sector, this difference is not expected to have significant implications for financial statements or for setting future standards. Now you can also see from the slide that PSAB includes other resources and other obligations as categories of financial position in its conceptual framework. And earlier in our presentation, Nikki noted that PSAB did consider the introduction of these other resources and other obligations, but decided not to adopt this approach. Now it's important to note that although IPSASB identified the existence of other resources and other obligations in its conceptual framework, IPSASB has not yet identified any transactions that would fall into these categories. The last difference with respect to the elements is with the asset and liability definitions. PSAB's proposed definitions include the expectation of receipt or sacrifice of future economic benefits. IPSASB does not. The implication of this difference is that applying the IPSASB's definition may result in more items meeting the definition of an asset or a liability. So in setting future standards, PSAB will need to determine whether an asset or liability recognized in an IPSAS meets its own element definitions. If it does not, PSAB will need to determine if recognizing an item required to be recognized by an individual IPSAS meets the financial reporting objective of providing accountability information. You will notice from the slide that the same difference regarding the expectation of realization is also in the recognition criteria. The last difference we want to mention is related to measurement. As Nikki noted, PSAB has a primary measurement attribute, historical cost. IPSASB does not. In its conceptual framework, the IPSASB lists a series of measurement bases that could be used, and some of the individual IPSAS allow or require measurement bases other than historical cost. The difference in the measurement approach may lead to significant differences in the future when developing standards. However, for now, although the measurement approach is different, a review of the various IPSAS and standards in the Public Sector Accounting Handbook reveals that many similar transactions can, in fact, be accounted for using the same measurement attribute. So for example, tangible capital assets are recorded at cost in both handbooks, and financial instruments are recorded at fair value in both handbooks. Now we talked about how the proposed conceptual framework will have an impact on users, on preparers, and future standard setting. The conceptual framework, or the proposed conceptual framework, will also affect various standards in the Public Sector Accounting Handbook, and these are noted through a series of consequential amendments. Essentially, these consequential amendments are being proposed to ensure consistency throughout the handbook. They are in a separate exposure draft that accompanies the conceptual framework exposure draft. These consequential amendments consist of the items listed on the right side of the slide, and then they continue to the list on the left side of the next slide. Now, we won't specifically mention them, as you can see on the slide, and as Martha indicated at the beginning of this session, you do have access to the slides on the webinar's landing page, so on the website where it talks all about this particular webinar. Now, it's important to note that the proposed consequential amendments are editorial in nature only. That means they do not propose a new principle, they don't change an existing principle, or they don't change practice. Now, PSAB expects to issue the final amendments after it finalizes the proposed conceptual framework. And like the conceptual framework, the amendments will be effective immediately when issued. Now, it's important to note that the exposure draft is a summary of the proposed conceptual amendments. However, PSAB has also published a supporting document that details all of the consequential amendments that would arise from the proposed conceptual framework. So please feel free to visit both documents. And so on that note, I will turn it over to Martha.
Thanks, Antonella. I want to thank both Nikki and Antonella. Before we start the Q&A session, let's talk about next steps. And the very next step is PSAB's goal to set accounting standards together with its stakeholders. PSAB is very interested in your views. PSAB values your input. Your feedback on past documents has been very much appreciated and considered. As this is the final phase of the due process, we are interested in knowing whether there are any major issues you have, areas that are problematic. You're encouraged to submit your thoughts either by submitting a comment letter or by visiting our new community platform at connect.frascanada.ca, and you'll see a picture at the bottom of the slide giving you a bit of a visual for the new platform. This new community platform is a quick and easy way to submit your thoughts. It also allows you to ask us questions in the event you have questions when you're working through reviewing the exposure drafts, and we will answer right on that platform. Your responses are requested by May 12th, 2021. As for next steps, we will be reviewing and analyzing your feedback from May through November 2021. And depending on the comments received, it is expected that PSAB would approve the new conceptual framework in December and the new reporting model in March 2022. May seem like a long time from now, but these are big documents to get through, and input from stakeholders to date has been extensive. So we recognize we've discussed many proposals. There is a lot to take in. Staff has developed a series of supporting documents to help you navigate through the proposals. All of these documents can be found on the project's webpage, and I'm going to read it out for accessibility purposes. FRAS Canada, frascanada.ca/public-sector/projects/underlying-performance. If you are interested in the reporting model proposals, please sign up for the webinar on PSAB's exposure draft, exploring PSAB's exposure draft financial statement presentation, proposed section PS 1202. So we've arrived at the Q&A portion of our session. I note we have 4 questions in the Q&A to ask. If you have any others, that's the place to put them in the Q&A section, and we'll do our best to answer them. So the first one says, the footnotes of what constitutes a financial liability or financial performance obligation refer to existing sections under Revenue PS 3400. The references speak to contractual obligations, legislative and moral ethical obligations. Is asbestos and maintenance deferred, then not a liability because we defer it? Or is it a liability because there is a moral obligation to address those requirements in time? I guess that's a very specific scenario, and maybe I'll take a shot at it first. So deferred maintenance is not something that PSAB has explicitly addressed yet, other than in its statements of recommended practice, in which the asset condition assessments, I think it might be sort 4, off the top of my head, does deal with deferred maintenance. But the idea being a liability, you need to have a line above which, a line of required maintenance. And if you haven't achieved that, then you've got potentially a liability. So it's a future issue for PSAB. I wouldn't say that the proposals would take you to deciding that deferred maintenance is a liability. With respect to asbestos, in particular in a building, the Asset Retirement Obligation Standard addresses that. I will note also that the Public Sector Accounting Discussion Group on April 8th will be discussing the application of the Asset Retirement Obligation Standard, and one of the scenarios being addressed is asbestos in a building. So I guess I would suggest that given the details involved in looking at asbestos, that maybe you tune in for the April 8th PSADG meeting, and there is a link to register for that on PSAB's website. The second question, and maybe I'll put this one to Antonella, is there some kind of comparison of what's new in the exposure draft comparing with the existing framework instead of the statement of principles?
So that's a very good question. So what we try to do in providing guidance out to the stakeholders is we did do an in-brief document for both the conceptual framework and reporting model that highlights what's new, as this person notes, what's new from DED and the statement of principles. Unfortunately, we did not release anything that compares what's new from the existing conceptual framework. But if that is something that you think would be helpful, I think that's something that we could think about producing as guidance. So your feedback.
Yes, I just wanted to build on that because I think, Antonella, in the exposure drafts where paragraph is new, you've referenced whether it's a new paragraph or whether it's based on an existing. So while there isn't a summary somewhere, I think there is an indication throughout the exposure draft as to whether it's a new thing or it's based on an existing paragraph.
Yes, you're absolutely right, Martha. And I think so that's definitely the case from a reporting model perspective. You'll see when you get to the reporting model exposure draft that we have made that reference. So yes, that should definitely help you. From a conceptual framework, we haven't done a similar exercise because we found as we were going into it that we were adding a lot of clarifications and moving things around. So it did make for a very unreadable document when we did sort of the same exercise from a conceptual framework perspective. But if you feel that that is something, and I'm talking for the audience and for us too, if we feel that that is something that you think that stakeholders think would be useful, please let us know, and we'll think about including it within our guidance that we issue.
Thank you.
You're welcome.
So we have the last two, they're actually related. In regards to the recognition exclusions, I have a question. I prepare financials for a First Nation. Does it mean that the land of reserves should not be recognized in land in the financial statements? Please clarify. So it's a bit of a complicated question, and I think it gets us into what is Crown land, and for a First Nation, that's a complicated question. I think if it's the land of the First Nation, then you would recognize it in your financial statements. I think that's recognized as not being Crown land. It is the land of the reserve, but that's a personal view. There isn't really anything in the PSA handbook that would specifically address your question. So yes, you're right. There is a recognition exclusion for inherited Crown lands. And maybe this is something that you could send me an email afterwards, and we could talk about it in a little more detail. And maybe this is the type of issue that should be brought for consideration to the Public Sector Accounting Discussion Group. I will note that PSAB is issuing a new draft strategic plan for comment later this year, and one of its themes would address more specifically financial reporting issues for First Nations, for Indigenous governments. And maybe this is one of the issues that needs to be brought front and center. But I will say that often issues like this are ones that are brought for discussion at the Public Sector Accounting Discussion Group. So if you do drop me an email, maybe it's a submission we could work on together that could be presented for discussion at the Public Sector Accounting Discussion Group. Let me just go. We have quite a few that have popped up since. Can you comment on how the differences between IPSAS and PSAB's conceptual framework could hamper future PSAB standard setting choices since they are not in complete alignment?
Ooh.
So Antonella and I have worked on a publication. I don't think it's been published yet, Antonella.
No, it will be published either at the end of this week or first thing. Please look for it first thing next week.
So that particular document actually goes through in more detail, similar to what we did with you today in a summary form, goes through the differences and highlights what implications there might be for future PSAB standard setting projects. So it is something that's been considered. Our feeling is, yes, there are some differences, but let me give you an example. Measurement. You know, if we were to look to leverage the principles of an individual IPSAS and it allowed you to use historical cost or fair value, some kind of current value. If we were leveraging the principles of that standard, then we wouldn't adopt the principles that deal with that other measurement attribute unless PSAB concluded that allowing that measurement alternative in a PSAB standard would better provide accountability information. So for the detail, I would suggest you look to those documents that will be published next week, because it's something that we have gone through and considered. And I think, Antonella, is it fair to say that our conclusion was that most of the differences aren't going to be a barrier to PSAB? Yeah,
that's right. That's right. And yeah, and sorry, the only other comment, sorry, I interrupted you. The only other comment that I would make is whatever decision PSAB makes, it's always the lens it's going to make those decisions is through the accountability lens. So that's the focus. So even though it's adapting IPSAS principles or in some cases modifying it, the accountability lens, it's what its focus will be, and everything is subject to the due process. So you will be able to provide input into what PSAB decides or its proposals. Sorry, Martha, go ahead.
No, actually, I was just going to go on to the next question, but I'm glad I didn't, because that was good input. So a question, thoughts on transitional timing for adoption of these new handbook sections, assuming adoption timing, I guess approval timing is on time. So assuming PSAB approves them when we've proposed so far, what would be the transitional timing for adoption?
So I can try to answer that question. So from a conceptual framework perspective, because so from a conceptual framework perspective, there is no sort of transitional timing. The conceptual framework would be effective as soon as it's issued. So PSAB will start using it right away. If you're a preparer and PSAB doesn't have a standard associated with a particular transaction that you're trying to account for, you would also use the conceptual framework right away to help you guide how to account for that particular transaction. And the same is for all the consequential amendments. As noted, the consequential amendments are all editorial in nature. They're meant to replace the existing conceptual framework with the proposed new conceptual framework, or be more clear in which section of the conceptual framework to look at. So that's why there are no transitional provisions. It's effective immediately when issued. However, from a reporting model perspective, there is a transitional period, and I'm just going to leave that in suspense. And so that was a teaser to watch the webinar on Wednesday. And also because I realized it's 1:05 and there's a whole bunch of other questions.
Yes, there are. We still have a few more open. So I wouldn't mind speaking to the next question. Net financial assets or net debt has been widely adopted as a measure of government financial position. Will PSAB be moving away from this based on these changes to the conceptual framework? Absolutely not. While net debt isn't foreshadowed as explicitly in the new conceptual framework as it is in the old, if you look at the reporting model proposals in the exposure draft for new section PS 1202, arguably PSAB is hoping to give net debt more prominence. We did receive some comments that moving net debt off the statement of financial position was diminishing its prominence, but PSAB has actually proposing a statement of net debt alone, its own statement, where the indicator is proposed to be calculated, an explanation of what net debt means is required, and if you wish, and it adds accountability, you can explain the change in net debt and the reasons for it, allowing all the narrative with respect to net debt to be on that one statement. So PSAB's argument is actually by giving it its own statement, it's increasing its prominence. So absolutely not moving away from net debt. PSAB recognizes how important it is, especially it's very familiar to the users of government financial statements and useful for them. There is a question, my apologies if this has been considered elsewhere, but I wonder where the increasing cost of compliance, whether through statute, regulations, or professional standards, would be reflected, especially for the large volume of local governments with limited operating capacity. The amount of time and money spent on compliance is material. So I think we mentioned compliance with respect to the objectives of financial statements. So there is, and we're talking about compliance with revenue, expense, expenditure, borrowing, etc. type of legislative authorities. And there is no proposal for increased disclosure from the existing requirements that are in the existing reporting model. So we're not adding to it. We're leaving things the same as they are, but I understand you're saying there are other sources that are increasing the cost of compliance. So Chapter 10 of the Conceptual Framework, the presentation standards, what it tries to do in setting out presentation concepts is make sure that the disclosures provided are at the right level, they're linked to each other, they're not boilerplate, that you look at the utility of the disclosures and make sure that they are providing good information for accountability purposes, link related events. And the idea is to both enhance the disclosure and rationalize it. So Chapter 10, as Nikki mentioned, I think it was Nikki that spoke to it, was its purpose was to get you to have a look at your existing disclosures and say, okay, what's needed here? Can we refine this? Can we change this? Can we present it differently? Can we link it differently? So I guess your question has been considered somewhat by the board, recognizing that we can't control what other bodies require of you. I'm involved in the post-secondary academic sector, teaching and research. Are you hearing any specific feedback from this sector? So do you want to take this one, Antonella, so it isn't Martha just talking all the time?
Sure, absolutely. So the answer is absolutely. We are hearing feedback from the post-secondary academic sector, a lot of feedback. And one of our task force members, well, aside from Nikki, who is a professor at a university, but one of our task force members is also part of the administration of a university. So he was very instrumental of providing that or coming to the board with that perspective from the post-secondary academic sector perspective. So all that to say that we, in the proposals that PSAB has put forward, that feedback from the post-secondary academic sector has been considered. And I do want to note that how these particular proposals, specifically more the proposals around the reporting model, how we've tried, or how PSAB has tried to address the feedback from this particular sector and really all government not-for-profit organizations. There's actually a separate webinar that is being hosted by Bill Cox, who's the chair of the Government Not-for-Profit Advisory Committee. And so that particular webinar that will go through the feedback received by the post-secondary academic sector and all government not-for-profits, and how the proposals from a conceptual framework and reporting model perspective try to address some of the feedback received. That particular webinar is being aired in April. If you can contact Martha and I, and we'll more than happy to send you a link to that particular webinar. That particular webinar is being hosted jointly by CPA Canada, and the Public Sector Accounting Board. And unfortunately, we don't have the link to the webinar right now that we can share with everyone. But if you can drop us an email, we'll be able to share that with you. Or unless, Martha, do you have access to that webinar?
I not at the moment because I'm sharing my slides.
Okay.
But the PSAB's committees, if you're on the PSAB website and it lists committees, there is the Government Not-for-Profit Strategy Committee, and links to those webinars are going to be provided on that committee's page as well. So that's another way for you to access the information, or you can drop us an email, as Antonella said. Question about future-oriented financial information. So some of the required public sector accounting sections, contractual assets, liabilities, debt, for example, involve future-oriented financial information. Wondering how this concept is addressed and how FOFI is of equal importance as the financial statements. So I think I would note that future-oriented financial information is not explicitly addressed in the public sector accounting standards themselves. The statements of recommended practices do look at future-oriented information. So at the moment, it's not part of financial statements, though we do recognize that you might be considering some of that information in measuring some assets and liabilities. Sorry, that's, I don't know what else to say on that one. In the interest of time, I'm going to pop down to the next one. We've got 3 more. If governments aren't being defined explicitly, but rather through their characteristics, do you think it's going to be sufficiently clear that First Nations governments should use PSAB standards? I think I would say that the term government is not being defined, because in most of the handbook, people understand we're talking about the government reporting entity, except when we're talking about approval of things such as legislation, bylaws, or budgets, in which case we're talking about the elected officials. And so that seems to be pretty well understood. In the characteristics chapter, characteristics of public sector entities, though, we do specifically talk about Indigenous governments and the facts that they use the standards. So, and I think, and the reporting model, the illustrative financial statements, there is a set specifically for Indigenous governments, which again, hopefully illustrates the fact that they're required. And we have done some outreach with Indigenous governments too, just to let them know that this reporting model is happening, and that legislation actually requires First Nations governments to use the standards issued by CPA Canada, but the public sector standards are referenced in that legislation as well. So I think taken together, all of those things do make it sufficiently clear that First Nations governments should use PSAB standards. But if you feel it isn't as clear as it should be, then even if that's the only piece of feedback you want to provide to us, put something in the Q&A on the and we will be keeping these questions and using them as feedback as well. But if you want to provide more detail, you can do that on the community platform that we mentioned earlier. Would the new conceptual framework not also be applicable or relevant for non-government, not-for-profit entities for the most part, since at their core, all not-for-profits, whether government or not, also have a public accountability requirement?
Good question, Martha.
It is a good question. I think you'll find that on a go-forward basis, the 2 boards are working together to ensure that there is consistency where appropriate with its standards. They're considering our work and we're considering their work. There are some unique aspects of government not-for-profits, the relationship to government being one of them, that do add a nuance that we feel you need to address through the public sector standards. But the 2 boards are talking to each other, and although they do have different groups looking at issues, similar issues, there will be consistency where the boards think it's appropriate. I think there was a recent discussion at the last Accounting Standards Oversight Council about that. We have another question. Is there any thinking about non-PSAB sectors, not government controlled, that use ACSB Part 3 moving forward. Moving toward PSAB on a basis that other like organizations use PSAB. For example, universities differ in accounting approach due to non-control or control by government. So I might ask Antonella in a minute to weigh in on that, and maybe Nikki as well. But so the different boards have different authorities, and control is the basis for determining what is in the government reporting entity, and therefore falls under PSAB's authority for setting standards. You know, it's not something that PSAB has the authority to do. I think it's similar to the previous comment. The comment is to make sure that the boards work together, and when it makes sense, if people have organizations are similar, they should use similar standards. I think that's the message I take from that particular question. I don't know whether Nikki or Antonella want to add there. It's a bit of a, there's a bit of a conversation between the two boards on this. And as I mentioned earlier, the nuance of being part of government does affect government not-for-profit organizations. They do have that nuance that other not-for-profits do not.
Right. I think you've given a good answer to that, Martha. I'm just wondering whether we shouldn't wrap this up. We're
yes.
What, about 18 minutes over at this point, and okay. Questions can be answered online if they. I guess you have these questions, so you could respond to those individuals. Yeah.
Yep. Okay, so I will do that then. If I can get the slide to move. We just want to thank you very much for participating today. We thank you for your questions. Thank you for your interest. And thanks for attending, and have a great day. Thank you.
Thank you.